Jessica Amir and I'm a market analyst. Today I'm at the offices of the Real Estate and Infrastructure Group, Lendlease, with the company's CFO, Tarun Gupta. Tarun, thank you so much for having us here today.
Pleasure to be here.
So first up, Tarun, for those who aren't really familiar with the Lendlease story, you've developed some of the most prominent projects around the globe, ranging from the September 11 Memorial and Museum to right here, the $10 billion Barangaroo precinct. But we'd like to hear it from you. What's your 60-second elevator pitch?
Well, Lendlease is an iconic Australian company with a rich 60-year history. Our vision is to create the best places. And what that means is that the places we create enrich the lives of people who use them, not just today, but for generations to come. Our business model is quite simple. We find land, we develop the land, we build it, and then we manage the properties, what we call our integrated model. We're now pivoting increasingly to international markets, and we now got 21 projects in 10 gateway cities around the world. We've got a great future with a lot of growth ahead of us.
So now I'd like to get an update on each of the three key divisions, starting with the construction division, which contributes about 20% to your earnings or EBITDA. And can you also tell us how the sale of the engineering and service division is tracking along?
Yeah, as you said, our construction business is targeting to be about 10 to 20% of our earnings going forward. We've got a global backlog in hand of about $15 billion. We have flagged to the market earlier this year that we'll be exiting the engineering and services business. That process is well advanced. We are in a sale process. We've had interest from a number of parties, and they're currently conducting due diligence. Once we exit the engineering and services business, the remaining construction businesses, what we'd call our building businesses, which are predominantly above ground construction of buildings, commercial assets, and residential assets.
And your development division adds about 50% to earnings, so it's your largest division. Just give us an update on that, as well as the lucrative $20 billion deal that you've inked with Google, and tell us what that adds to the business value as well.
Yeah, the development business has been a very strong performer for Lendlease. Last year, it delivered around 50% of earnings. As you said, we had a number of apartment completions here in Australia, in Darling Square here in Sydney, and we had 100% settlement of those developments. But as you say, the really exciting part in that part of our division is the growth that's going to come in future years. We've now got 21 urbanization projects in 10 gateway cities, with a backlog in urbanization exceeding $80 billion. And as you say, we're really excited to have partnered with Google to redevelop their land holdings in the San Francisco Bay Area. This entails 3 key precincts of about the creation of about 15,000 homes. There's a real undersupply of quality homes in that part of San Francisco. And it's a 10 to 15-year project. It's very large. And we're really excited about working on that project with a partner like Google. We will be looking to create the best innovations that we can with a like-minded partner like Google, who are obviously a very innovative company. But we've just secured this project in the quarter just gone, and it's a very exciting project. And over coming months, we will be talking to our investors to explain the immense opportunity this project has for Lendlease over the next 10 years, because we don't think the market has fully appreciated the great opportunity this project provides.
And Tarun, your last division is the investment management division, and you've got about $35 billion in funds under management in that. So just tell us how that business or how that department's going.
Yeah, this is a very important part of our 3 divisions. It's where we create recurring earnings for the group. What it is 35 billion of really premium assets under management. It's backed up by 150 institutions who invest in that platform. They're some of the largest sovereign wealth funds and pension funds from around the world, including some of the largest pension funds from here in Australia. And this part of our division, this division has been growing at a very solid rate over the last 5 years. We've doubled funds under management. And last year, the funds under management grew by 17%. And as we look forward to our pipeline over the next 5 to 10 years, we have over 50 billion of institutional grade investment real estate that we've secured in our development pipeline, which we anticipate a majority of that will end up in funds under management. So the growth outlook for that division is very robust.
And since handing down your full year results back in August, you've achieved a lot of significant milestones since then. So just walk us through some of those.
Yeah, a lot has happened in the last few months. We've made a very positive start to this financial year. Here in Sydney, if I just do a bit of around the world, here in Sydney, only recently over the weekend, we announced the launch of our One Sydney Harbour residential project here in Barangaroo, and we achieved an Australian record, 140 million for our penthouse and sub-penthouse at a rate per square metre of over 100,000 per square metre. So we're very pleased with that launch, and in fact, through our VIP launch, we've already secured over $1 billion in pre-sales. So that's a very exciting start to that part of the Barangaroo project. And just staying here in Sydney, also Circular Quay Tower, which is a premium office building we're developing in Circular Quay, secured its first major tenant, Salesforce, a great brand to come to that part of town. And the tower will now be called the Salesforce Tower. So very pleased with that progress. If I move to Asia, our Asian business, in Singapore, we only a few weeks ago launched the Lendlease Global Commercial REIT, which is our first listed real estate investment trust in Singapore. And that's made, again, a very positive start. It's had a very good support from the market, and it's currently trading up on what its issue price was. Also in Singapore, a major mixed-use urbanization project, Paya Lebar Quarter, has completed over the quarter. And the project is made a very good start. It's over 90% leased now, and trading has commenced in the retail, and the office workers are coming into the precinct. And just if I stay in Asia, in Kuala Lumpur, TRX, a major mixed-use project that's underway, we did a residential launch, and again, we've had very good support for that. If I move to our European business, UK has been a bit quiet given we're going through the Brexit scenarios at the moment, but our business in Milan, our Milano Santa Giulia project, is progressing well. Two of the buildings, office buildings, have had planning approval, and we're working to get capital partners and tenants into that building. And finally, if I go to the Americas, we've had, as we mentioned before, great success in securing the Google project in San Francisco, but we also started construction on our Lakeshore East condominium and multifamily project, residential project in Chicago, which is a 50-50 partnership with a key client of ours, First State Super, a key pension fund and institutional investor here from Sydney here in Australia. So a lot going on in the business in the first few months of the year.
So looking ahead to strategy and focus, you've already mentioned that you've got $50 billion in your pipeline, but your total pipeline is about $100 billion. So tell us about that and your key strategy.
Yeah, our global development pipeline is now approaching $100 billion. And that is great visibility of long-term earnings for the group. These projects that we've secured are large mixed-use projects in some of the leading cities of the world. They are prime real estate, and we have long-term development rights, which means we can ride out cycles and create long-term value for all stakeholders. What it means over the coming years is, over the last 5 years, we've been producing in our development business about $4 billion of product every year. And our pipeline really in that part of the business was about 25 billion 5 years ago, and now it's approaching 100 billion. So there's a big opportunity for us to really increase the rate of production in our development business. And that's what we really focused on. And we plan to come back to the market over 2020 and articulate what that rate of production is going to look like. This big pipeline also provides a secured construction pipeline for our construction business, because we do all our construction in-house. So that business also has a good outlook because of the secured pipeline. And as I mentioned before, our investments business, our investment management business, has visibility of that 50 billion of institutional grade investment real estate that we have embedded in that $100 billion pipeline. So again, our focus is on talking to capital partners who are showing a lot of interest in our pipeline, to do deals with them and to start to grow and continue to grow that investment management business. So overall, the outlook is very exciting for Lendlease over the long term. And really the big thing we focused on is how to execute safely and profitably for all our stakeholders.
And just lastly, Tarun, why should investors consider adding Lendlease or LLC to their portfolio?
Well, as I've been indicating, we are in a unique position. Firstly, we're playing on a strategy of urbanization, which has very high barriers to entry. There are not many global players who are operating in the gateway cities that we are operating in, who have that international experience to bring the best solution for stakeholders in those cities. So we think we are in a unique position. We have a great track record. We've delivered these projects. It's not something we're starting off on. We're sitting here on Barangaroo, which is a great example of what great places we can create with our integrated model. And as I've mentioned, we've got very strong access to third-party capital, those 150 pension funds and sovereign wealth funds, who we've built relationships over the last 10, 20 years. And that relationship is built on trust. And they want to partner with us to deliver this immense pipeline that's ahead of us. I would argue there's not many companies with such a positive outlook.
Well, Tarun Gupta, the CFO of Lendlease, thank you so much for your time and for your insights today.
It's been a pleasure.
If you'd like more information on Lendlease, head over to Bell Direct's website or contact your advisor.